Hey friends, how are you? I know it's been a hot minute since I've given a market update here about Phoenix real estate market. Somebody commented on a video from like a super long time ago asking if I was okay. And that answer is yes, I am fine. Thank you for asking, by the way. I wanted to come back and share some insights into what's going on in the real estate market. I don't always come and make videos, but I will make it a habit to try and post more often for you guys. Thank you for reaching out and, kind of saying that you enjoy my videos. So let's kind of go into what I've got for you guys today. I'm going to share with you a little deck I prepared to kind of go over some of the main pieces. I think it's this one here. So let's go into what I got for you. So yes, here's me. I'm with Realty Executives, and I'm an analyst and a real estate agent, and I've been in the real estate industry, gosh, for almost 17 years. So let's talk about what we're seeing currently. And I think the most important thing that I want to talk about is this graph here. This is the mortgage trend graph. And so as you can see, like this is where we're at now, this point here. It's probably the lowest that we've seen in a long time. We're at lowest buyer demand. This is people applying for mortgages, and you can see that we're probably lower than we were in 2000, like the 2008 crash. One notable thing about the last crash was that there was government stimulus. Do you guys remember all those that tax write-off that we got to go purchase a home? It was like, I don't remember what it was, but there was tax incentive for people to go purchase homes because the market had crashed like so hard. And I think in 2008, 2009, there was tax incentive, and that kind of pushed mortgage applications up, and then they crashed again, and we had our true bottom in 2011, I think, as far as buyer demand happening. And I remember that very, very well because I think I was one of the people who actually purchased. I waited until 2011. Prices were great in 2009. But I was probably one of the last people to get like the super cheap houses in 2011. So that was interesting. So just to let you know, like I don't foresee obviously any government stimulation happening. The government's doing the opposite right now. They're trying to stop people from running up for real estate so that they can slow inflation down. So we're definitely not going to get any government stimulus this time around. And I think that the only way, I think there'll be a natural stimulus if they lower interest rates or, do something to help lower prices. That'll be like the natural stimulus that we need because there is some pent up demand. People are waiting. People want to buy houses. But, affordability just isn't there. And we're going to talk about that. So let's look at the supply trends. Now, guys, this was from last year's video. And so this was May 2022. We had an total inventory of 13,870 houses. And you can see inventory was starting to rise going into the summer of 2022. And that's because interest rates had started to rise, right? They had rose above like that 4% mark, and they were heading 5.5% to 6%. And so we started to see this inventory rise. What happened after that between then and now, because I haven't updated you guys, let's take a look. So here's what happened. This was May 2022. So last year, inventory continued to rise until about September, October. And then we kind of saw inventory just start to die, like it died. And this is where we're at now, 15, which is kind of right around where we were last year. However, the trend of inventory has just been fluttering down. And I may predict, I'm going to be so bold to kind of predict that inventory might kind of bottom out here. I don't know how much lower it's going to go, probably not much, because we are heading into summer. I mean, we are in summer, it's August right now. And we're going to be heading into the fall. Usually buyer demand fitters out, and inventory does rise a little bit. Demand falls, and like interest rates are they went up a little bit again from like 6.8 to 7.2. And so interest rates went up again. So I think that that this might be the end of like the buyer demand, which means that inventory will start to rise a little bit, or at least stable out and flatten. Because what we're seeing with buyer demand, like that first graph that I showed you said buyer demand was super, super low, right? But real estate agents here in Phoenix are seeing like, oh, I got multiple offers in my house. Not because buyer demand is high, but because inventory is super, super stupid low. And it's so interesting to see this dynamic. I've not seen it in the 17 years I've been selling real estate. We've always been in this like really kind of like run up market, either really super high inventory or really low inventory. But I've never seen it where inventory is like stupid low and buyer demand is stupid low. And I've never seen inventory fall below that super low buyer demand. So it's really a really strange dynamic. But if inventory does, equal back up to like where buyer demand is, we're gonna see like that'll be enough to tip the scales to where inventory starts to rise again, and we could start seeing those home prices happening, like cuts happening. So this is super funny. Anyway, so that's where we're at there with total inventory and buyer demand. So we're seeing remnants of a seller's market, multiple offers, just because inventory is really low. There aren't really more buyers out there. Like buyers are still few and far between. So like I said, any tip of that equilibrium of inventory is going to shift our market dramatically. And it's just going to take a little bit to tip that market where we're at. This was buyer trends last year. So last year, again, we started seeing inventory go up. We started seeing demand go the opposite direction, right? Like this gray line was people putting houses under contract. And so we started seeing people going under contract, going in the other direction, inventory going up this way. And that means like prices were set to drop. And they did. Prices did drop going into 2022. And then with that little tiny bit of buyer demand that we had this year, like when inventory falls and this little tiny bit of buyer demand, this little tiny inflection in demand, it made like our house prices kind of stabilize again. But again, a little tiny bit of buyer demand going in the other direction will cause inventory to start rising. And I think we're going to see that because again, we're going into the fall, we're going into the winter, not a lot of people buy around the holidays, things like that. So I think we're going to see this little itty bitty buyer demand going in the other direction. So just be prepared for that. Be prepared to kind of see decent market go up again. Home prices could start to fall going into, the end of 2023. That's my prediction, but you never know. This market's crazy. So, but that's what I'm thinking. So let's talk about the interest rates, right? Let's talk about affordability. It's a big, big part of this game. Yeah, real estate's game. Just kidding. It's a whole industry. It's how we make our living, right? A lot of us, you probably have friends that are real estate agents right now. You may want to check on them, buy them a cup of coffee. They're probably having a really hard time right now. But because of this, not that there are any $300,000 mortgages right now, they're probably all $450,000 and up for anything decent nowadays. But these were the numbers I chose for the 2022 video. And so I brought them back over to this video. But here you can see like in December of 2021, a $300,000 mortgage was $1,265. And then in 2022, it was 1,800, and in 2023 it's 2,077. So like affordability keeps going in the wrong direction, and that's not awesome, right? So it's painful, and it's going to continue to shrink that buyer demand until morale improves. Let's talk about that. So that's kind of what we're seeing here, right? Let's look at this one. 90% of homeowners have an interest rate under 5%. 50% of homeowners have an interest rate under 3.5%. This is why there's no inventory. This is why people do not want to put their homes on the market, because they purchased they got this home probably for like 50, 60, $100,000 less than what's on the market right now. And the interest rate was half, 25% to 50% less than the interest rates that are on the market today. So nobody wants to sell because they can't afford to buy. And even if they walk away from a house with $100,000 in equity and they dump it into the next house, they're probably still gonna have a mortgage that's increased of 25 to 30% higher than what they were before. And people are just like saying, I can't afford that. Right. And so I believe that these low interest rates that we've seen, like they were historically low. I've never seen interest rates at 2%, 2.5% for a mortgage. Never. And I think that fundamentally shifted seller behavior. We are shocked. We are stunned. We have these mortgages that are affordable, and we can't see the light to move forward to purchase our next home. And I think we're going to continue to see low inventory, or at least lower than average inventory, because of these low interest rates that we're kind of all holding. And I think that is probably not going to shift until interest rates go below this 5%, right? Because this is where the majority of the people are under 5. And I really think that interest rates will have to come at 5 or below to kind of see that shift. Oh, yeah, I missed that point too, is that we will continue to see lower than average inventory until a large selling incentive takes place, right? And so a large selling incentive, I feel like I didn't do a great job on this, but I got two things here. I want to add a third one. Is selling incentive could also mean, aside from housing affordability, is there could be an economic thing that happens, right? If people lost their jobs and they had to sell because they couldn't afford the mortgage anymore, or they have to pay off credit cards, or who knows what, right? Like things could happen in the economy that we haven't seen happen, right? Everybody's been watching, oh, the jobs are okay, the jobs are okay. Yeah, they're okay now, but could it shift? Possibly. I'm not saying that they will, but that could be an event, right? That could be a selling event that I wanted to add to here. Other selling events would be home prices dropping, right? That would increase that affordability. And so like even if interest rates were at 6%, but if home prices came down, like it would all make sense to be able to say like, yeah, 6% is okay because I can afford this now that home prices came down. And then interest rates dropping would be the other selling event, right? Like I said, I think that interest rates have to come below that 5% in order to make this happen. That would be a large selling event, right? Because a couple things would happen. People who purchased over 5%, 5.5%, 6%, 7%, people who purchased there could refinance their current home if they like their current home, and they could refinance, right? And that would get them a lower mortgage rate. Or they could sell their current house, take the equity and purchase a new house at a lower interest rate, right? If they needed to upsize, downsize, or whatever that looks like. So that would be the selling event as well. I hope that there isn't an, economic one, right? Where people losing their jobs and we start seeing foreclosures or short sales or things like that. I hope that we don't see that again. That was awful to go through. I helped a lot of people sell their houses under a short sale, right? A lot of people were like, oh, I owe 300,000 on my house and it's worth 120,000 right now, right? And I would help them negotiate with the bank in order to get their home sold. And it was a rough time for some people. I mean, that's a hard thing to go through. Like, technically, you're losing your house. And it does ding your credit and it makes you feel like crap. So I hope we don't go through that again. And I hope the economy remains somewhat stable. And I really hope that prices will come down a little bit, even though I'm a homeowner, right? I own a few houses. I still think that we're overpriced, and I am prepared to lose out on some equity to get that affordability back so that I can purchase another home, right? So let's talk about that. How would that happen? How would prices come down in this market without like a giant increase in inventory? I think that, again, it's going to be because buyer demand is going to keep falling. For example, chose to audit 85042, 85024. That's in North Phoenix. I've lived in the Reserve and in another apartment complex. So I was going through my divorce. And during that time, these rentals were about $1,200 to $1,300 a month. I moved out and purchased another home when they were trying to jack the rent up to $1,500. And I was like, oh, that's too much. I want to buy. So that's what I did. Because I didn't want the rent to go up. So I was able to purchase when rentals were more expensive than owning. Now it's shifted, right? Owning is now more expensive than renting. And so that's going to entice people to rent and drop out of becoming buyers because it's just simply more affordable to rent right now. So when we're looking at these rentals in 85024, like a small 2-bedroom is like $1,750 a month, right? And the cheapest house in 85024 right now is about $400,000, right? And that's about $2,455, including your mortgage premium plus your taxes and your insurance, right? And those are things you have to have on a house. So $2,500 basically equates to being 40% cheaper to rent than it is to buy right now, right? And when I bought my house, it was the opposite. I was like, oh, I need to buy because they keep jacking up the rent. And it was a good time. This is not a good time. This is a bad time. People are probably freaking out because like they can't buy right now, but like they're settling on renting. So that means these buyers are dropping out of the market. The gap between renting and owning is just so high. Less buyers will be entering the market to purchase. The less buyers there are, the longer homes will be sitting. The longer homes will be sitting, the more price cuts happen, right? And so I think that'll naturally start bringing down the home prices, right? I think we're at that weird, like, oh, the market's just got to tip a little bit. And I think we're going to see that. And then we talked about the interest rates dropping, right? They have to drop below, probably, get real close to 5% to even make it worthwhile. That's a cool graph. Let's talk about trends. That number is wrong. That's a typo, and I apologize. So this right here is just confirming that what I saw when I did that audit in 85024. This graph right here, right? About this time, 2015, is when I purchased my home. Remember when I said like, hey, it's more affordable to purchase right now than it is to rent? This is saying that it was 4.7% more affordable to own than it is to rent. Okay, that was 2015 when I bailed on that apartment. Not bailed, my lease ended. But here we are here. This is saying that's 47%, okay, more expensive to own than it is to rent right now. And this is going to be important as we move forward in 2023 and going into 2024. This percentage is what I will be tracking. I will be keeping an eye on, right? And this is average 47% for Phoenix. So 85024, it was 40%, right? Some zip codes could be 30, some could be 50 around Phoenix. And our average right now is 47% more expensive to own a home than it is to rent right now. So that's going to mean some things moving forward. Well, I feel like that's the same graph that we just had. All right, so let's talk about economic trends. This is what we saw in 2022, and I thought I fixed this. Here we go. So in May 2022, the situation was, okay, when I did this last video, the stock market was falling. Inflation was rising. Interest rates were rising. Consumer pricing, rising, okay? A year later, May 2023, it's actually beginning of August right now. The stock market was still rising, but right now in August, it just may have shifted just a little bit. And I'm going to show you that on the next graph. Inflation falling way down from last year, right? Fed's kind of happy, right? This is probably the last interest rate hike that they're going to do for a while. And they're going to see, can we hold inflation? If we stop raising these rates, will inflation go up? Okay. If it remains good, then hopefully they'll start cutting rates, right? But they gotta hold it. So we're gonna see this stagnated stuff happening, right? So mortgage interest rates are stagnated high. They've been 6.8, 7%. They've been floating around, that for the last long time. It's been in the high sixes to the low sevens for quite a while. So we've been sitting at these high rates for mortgage interest rates for quite a while. Consumer pricing, also not getting much cheaper out there. I think last year the price of eggs was like stupid. Gas was kind of high. Things were kind of high. They've come down a little bit. Still kind of expensive though the last time I went out to eat. So I'm not seeing a lot of things come down. I did see Red Lobster though have endless shrimp for $20. So that could be a sign. Could be a signal, guys. But let's talk about the stock market, right? So let's compare it. So the next chart I'm going to show you is where we were in 2022 and where we're ending up in 2023. Okay, so this is the S&P 500, okay? This is where we were, 2022, right? And it just was falling. This was about May 2022. Actually, when I did that last video, May 2022 was around the bottom, you guys, of like this dip, right? There was a one more in September that had a big dip. So hopefully you guys caught the market and purchased some stocks down here. I do remember picking up Amazon for like $86 a share. And it's back up to 100 and something. And I was quite happy with that purchase. And so I think that, if you entered the stock market and hopefully you caught that bottom, that you rose this enjoyable time up, right? This, I think, like this year, I think S&P is up like 20 something percent right now. And so if you just bought shares of S&P 500, like you're looking good. Now, on average, it like goes up 8 to 10% a year. So I don't know if it's going to continue that way. It looks like, it's already starting to come down a little bit. So we might hit one of these levels and see these peaks here. Usually when it drops, it's going to hit some kind of level like that. So the question will be, if we come down, will it push through this level? Will it keep continuing down, or will it bounce and kind of go back up? So that's kind of what I'm watching. Anyway, that's what's happening in the stock market. Again, that means that things are good, right? The stock market's doing good, although the stock market is not the economy, right? But it's just a piece of it, right? So general sentiment, first, we are starting to see this is August. We're only like 4 days into August, you guys. Doesn't look good in August. So there's definitely some buying opportunity. Probably we'll see where this lands, right? And then we'll see if we want to buy some. But that's where we are in the S&P 500. So comparatively, we could start to see this weakness, and that could coincide with what I've been talking about, that we're like right here with the housing market, like we could see that shift, and that it could affect this as well. So I'm watching it. So what does this mean? If you are a buyer or if you are a seller, I think this one I have sellers, right? This is what I wrote last year. Okay. The tables had turned, right? Buyers were getting more control of the market. We're at this weird equilibrium where it's like the little tiny shift in buyer demand will make this true again. So buyers, could be gaining control of this market in the next few months. So if you're looking to sell your home, you might want to pay attention, okay? Because right now, again, like buyers are like, So you may see multiple offers, or your home might sit. That's what I got to tell you right now. So again, to make your house more saleable, right? For buyers to want to choose your home over the others that are on the market. You may want to offer an interest rate buy down. You're definitely going to want to make repairs if a buyer asks. You don't want them bailing on yours to go find another house, right? Make sure it's move-in ready, make sure it's clean, maybe a fresh coat of paint. Definitely don't overprice because it's weird. But I think in this market, if you're one of those people, right, that you're in a really low inventory neighborhood, you're going to get those multiple offers anyway. So don't overprice it. Like, let the market bid it up. And then closing cost incentives, always helpful in an overheated market, right? And so, you may want to offer them up front or not offer them, but like if a buyer asks, maybe agree to them. If you are a buyer, here's what you need to know. Again, this was my advice for last year because we were starting to go into rising inventory, which again, we may be going into the end of 2023. This is funny. You may be a young family looking to get out of an apartment and get more space. But as we know, maybe a little bit cheaper to get into an apartment right now. But if you are looking to get out of an apartment and get more space, you hopefully will have more options going into the end of 2023. I think that inventory will start to rise a little bit. Again, you could ask the seller for an interest rate buy down, right? Ask the seller for repairs. Definitely get that home inspection. If there's a house that's stagnating on the market, right, you can negotiate the price, right? DOM means days on market. So if a home has been sitting longer than the average, like I think the average days on market right now is like 40 something. So if a home has been sitting on the market for 60, 90 days, you might have some negotiating power there. And again, you can always ask for closing costs or the seller to cover some of your mortgage costs if you're looking to purchase. And in red, I have up here, if you are a buyer, buy when you need to, buy when you can afford it. I still think owning a home is a great investment. I still think that we have this weird rental aspect of our market, that we have companies that are building to rent, and that you're seeing huge communities of like these smaller homes that you think that you could go in and buy, but you can really only go in and rent them. And so like that's a trend that's happening around the valley that you need to be aware of it. And that's one of the things that's driving inventory down, is that like they're just not building homes for sale, they're building them to rent. And that's another reason why there's no inventory, aside from like us like not wanting to list our homes because we have these super cheap rates. But like, I think that's something that we need to know, and keep in the back of our mind too. Like, as a homeowner, like I don't think I want to let go of any of my properties just because I think that this low inventory is probably here to stay for a while. Like I think this might be our new norm. Like, even though it might go up or might stabilize, I still think like we're going to see lower than historic inventory numbers. So, which is interesting, but it's just so weird. Anyway, so buy if you can. If you can afford it, go ahead and buy. If you're looking to downsize and you can afford it, go ahead and buy. There's still tax advantages to owning a home. I think owning some of the limited inventory is going to be key. And I think it's going to be interesting to watch the next year play out. So, that's what I got for you guys. And thanks for listening to this market update. And if you want to hear more from me, leave me a comment, let me know, because I never know what you guys want to hear. And then let me know too, like, are you one of these people? Like, do you own a home with like a less than 5% interest rate? Like, let me know, like, what are your thoughts? Are you planning on moving, and can you afford to move? Have a great weekend, or however YouTube time works. Bye.